moving to the next one. The next session is on distributed digital public infrastructure. And to present this one, I'd like to invite on stage the head India Blockchain National Payments, Mr. National Payments Corporation of India, Mr. Sudeep Choudhary. Everybody welcome on stage, Mr. Sudeep Choudhary.
I couldn't hear the applause properly. I'm going to introduce him again so that you applause properly and add that extra energy in the room. Once again, everybody, welcome on stage, Head India Blockchain National Payments Corporation of India, Mr. Sudeep Choudhary. Better now. Thank you. And everybody, after every session, we'll take questions. So please ask your questions, okay? We would want to make it as more interactive as possible. Yeah.
Very good morning, everyone. My name is Sudeep Choudhary, and thanks for the introduction. I would be introducing you to a concept that we've been working at NPCI. Yep, am I audible? It's a small room, so it's fine, I think. Yeah, so I will be introducing you to a concept that we've been working in our kitchen for some time now, and it's beginning to come out in next few months. This concept is called distributed digital public infrastructure. There are many names by which people know these kind of infrastructures. One is digital ledger technology is known for it. We have also heard about blockchain, but this is essentially the ends and not just the means. So what is a digital distributed public infrastructure mean, right? A digital distributed public infrastructure provides digital goods to be transacted without a central enabling party becoming a bottleneck or a single point of failure for the transaction to go through. So currently, all our infrastructures, as we see across the board, are having certain degree of dependency on two things, right? One of the biggest dependency that we see is, like for what the business that we are into, it's a little bit counterintuitive, but NPCI essentially enables payments across the board for all financial institutions in the country, right? But it also, because of its nature of its job, becomes a single point of failure, because if NPCI infrastructure comes down, it can actually reach to outage, right? And we see not that many of it. We have a lot of processes in place, but we are trying to solve if it is possible to not have this situation at all. Not possible, because the infrastructure is not dependent centrally only on NPCI. And that's the essence of what a digital distributed public infrastructure is. A digital distributed public infrastructure removes the single point of failure from the system, right? Now, the transactions that we do in this kind of digital distributed public infrastructures are essentially having two parts to it, right? One is the digital assets. We are seeing upcoming splurge of digital assets in the market. The Web3 is a very good example, and we are seeing that happening at scale in the market. So one is the asset aspect of it, which changes hand and has to be and might better be stored on this distributed infrastructure. And other is the currency or a store of value token, right? The store of value token allows us to actually to transact this digital asset over this infrastructure, right? In a classical system, if you are following blockchain and crypto, you would be listening to the store of values, new store of values called cryptocurrencies coming in. But we are looking at, can we actually create an infrastructure which allows INR to act as a store of value for a digital distributed public infrastructure? Right? So that's the second basic aim of this particular infrastructure, right? With the advent of blockchain, we have seen certain things that have been proven without a doubt, right? We have seen that we can clearly see that on a digital level, we are moving through a phase of decentralization, right? You might be a proponent that is distributed way the only way. Answer is never a single or simple as that. It's not a black and white. But what we can clearly see is that we have reached to the Moore's law threshold, where it is more expensive to centralize the infrastructure than decentralizing infrastructure. Hence, there is a gradual movement toward decentralization. It doesn't mean that everything needs to be decentralized. It's a journey, but essence is that we basically are in a phase of decentralization of digital infrastructure. The second thing is that we are seeing the DeFi expand pretty rapidly, which means that there is innate demand of market for certain kind of products. What does this Web3 do, which was not possible for Web2 products? And we started looking into this aspect. When we looked at it, self-sovereign identities was something new. So far, everybody has identities, but identities are held by custodians at all points, right? So we see if you have a Facebook ID, and Facebook goes down, your ID is useless, right? Not to say, even in financial regulated industries, if your bank account, you try to operate your bank account and bank servers are down, you will not be able to operate it, right? So because the custodianship of that bank account is essentially with the bank system. I mean, I'm simplifying it. There are modes that they have made sure to enable this to happen, but essence still stays the same. The custodianship stays with a central entity. So we're seeing this really nice concept, which seems to gather traction, that what if digital identities are actually held by the user and entitled by the user, right? That's one thing that we are seeing. Another thing that we are seeing very commonly is that the entitlements of digital assets that are linked to it. So my insurance account, if my insurance company goes bust, should it actually be, should the IRDA actually honor that? Or should or is there a way to find out that my insurance policy is actually active or not active, given that my insurance company has gone off? Idea is that my insurance should be my ownership because I paid for it, and IRDA is a body in our country which actually prevents people to sabotage it, even if in case of failure of those institutions. And because of that, I should actually be able to claim my insurance, right? But currently the infrastructure is not created that way. So we looked at it, this looks like a good idea. But in the Web3 world, we saw that the entitlements are designed differently, that ownership is with the user. Right? So if you held any sort of digital asset, might be a NFT token or any sort of such asset, it looks like that the ownership does not depend on the counterparty anymore. That's a great concept. So we looked at it further closely. Right? And then we have heard so many times about the things that we know about blockchain and distributed technologies, that there's a better security mechanism in place, then the encryption happened at a data level rather than at a stream level. We have value chain optimization that is possible and reduced costs because of that. So we hear this umpteen number of times in various places. So those things are there. But we saw that those three things are essentially for the value chain, for the businesses to actually gather from. And the first two things are basically for the users. So we started, maybe the users can get something out of this decentralization as well. And we started looking a little bit more into it. Right? What we observed is that that people, all these Web3 infrastructures, be it Ethereum of the world or any distributed infrastructure that we're looking in the market, had certain principles around which that they grew, right? One of that is that they always grow around shared value system. And what does that shared value system mean? Let us just entitize that, right? And we saw that they have certain set of rules that they have laid out, that how will I participate in this distributed network? They have also said that how can I change the rules of this network, right? How can I make certain amendments to these rules? So there are standard SOPs that they have created, and which all the community has decided to agree upon and follow, right? And most importantly, if there's a transaction done on it, everybody has a method or a process that they have come to agreement that this is how I'm going to settle this transaction, right? So these three things seem to be a common trend between all distributed technologies across the market space, right? So, and one word that popped up again and again is that we have a community of developers, a community of companies, a community of startups and VCs who are working, who are share this common value system or share this, and hence they are coming together to build a network of financial services out of this particular distributed network. Right? So we see that the technology leading to a community, leading to a network. Now, this concept of community has not been nothing new, right? And we started thinking to ourselves that what is the role of NPCI in this particular space? Now, definitely they are hitting transactions, so definitely it is relevant to us that what do we do? What is our role in it, right? And we decided that, hey, you know what, this community thing, that's something that we have been doing for a while, right? We've been building these communities for we essentially, NPCI, if you look at it, represent the trust of financial system, because we have been at the center of this, being the payment rails, we've been at the center of this system for a while. And there are so many banks, fintech companies, many of them who are here today, who have been participating in this community for some time. And that has created financial networks and of transactions and capabilities that exist within this country today. And we said that, okay, what if we decided to transform our network to a distributed system rather than a centralized system? And we started building a community which allows other this decentralized community to actually build into us. And what will we stand for? Why will people come to us? We started evaluating all these things. Right? Can we build bridges to all the various Web3 communities and distributed communities in the market? And then we decided to create a distributed digital public infrastructure. And this distributed digital public infrastructure would provide people certain capabilities to leverage certain rules that we already exist. And what are these rules? Now, look at India. If we thought of India as a community, an Indian financial system as a community, we already have agencies which are deputed to decentralize the power from our central government. Right? We have SEBI, which basically looks at securities. We have IRDA, which looks at insurance. And we have several agencies which have been doing this for a while now. Right? So there is a sense of community that exists already, and we basically have a set of rules and laws that govern this piece of the land and the financial transactions that happen in this part of the land. What if we could encode these as part of our digital public infrastructure and allow bridges to all the other public infrastructure who are interested to work within the gambit of our governance, within the gambit of our compliance structures, and actually work with us, and hence to be able to prove that they are creating value in line with the rules of the land. And that is at the helm of digital distributed public infrastructure. Building bridges to these systems. And what will these bridges be? Why will they come to us? The first thing that comprises our infrastructure is essentially a proof of compliance infrastructure. The part of digital public infrastructure that is salient is proof of compliance. Now, compliant to what? The compliance to asset and identity standards. We have several digital dematerialized assets that exist in our country. CDS did that for us for our equity market. But there are so many other assets, insurances, for example. There are bond market, which is illiquid bond markets, which exist in our country. And then we have we also have our real estates and real estate contracts, which are also part of which could be tokenized very easily and be put as an asset on a digital, because entitlement of a land is essentially a virtual concept. Land ownership is essentially, you don't see a land. If you see a land, you can't say that who owns it unless you go to a registration. It's a virtual asset at the end of the day. And that virtual asset, the entitlement is being a virtual asset. It's also so what are the standards for people to do that? Right? How do we create an identity and interact with our compliance with an IRDA regulated space or SEBI regulated space? So that becomes a standard that we could bring in, right? Protocols and standard operating procedures to actually complete a transaction, to settle a transaction, what all they need to be compliant to, right? And last but not the least, geofencing. Very, very important aspect. One of the biggest problems we see in a distributed network today is the fact that we are, being a mid-tier economy, have concerns around wealth flight at mass and essentially in form of AML and KY, in the form of AML, right? In the money laundering format. And if we have to tackle this problem, one of the things is that why not create a geofencing mechanism? We already have it. Some of it is already there in our API infrastructure at NPCI. Right? We have already done some of these things. So what if we expand this to ownership of not just on the store of value, which is payment rails, which we already provide to the market, right? Currently we have only message-based. In future, we might even issue a token-based, payment structure, right? And then also provide an asset transfer standards to it, and provide a geofencing capability for all the other networks to prove that they are working within the ambit of this country. Their servers are located in our country, their own entitlements are located in our country, and they're following the rules, the functional rules that they need to follow. And that creates what is called the proof compliance by default mechanism, right? Because you are following and you're registering into our system, the smart contracts abilities that comes with this infrastructure allows you to be that once your transaction is coming through, the smart contracts enables, it already creates a mechanism that you cannot be non-compliant, taking the heavy lifting of compliance away from you. So a compliance by default mechanism. Proof of governance infrastructure. Now, as you can see, right, we are talking a little meta here, right? We are talking at a philosophical level. Now, we don't want to be in everybody's business. We want to make sure that securities companies have standards and platform to work with, but we do not want to manage the security system. We want to be managing payments is itself a big deal for us, and it takes a lot of time and energy, right? Getting into securities or getting into insurance would be a very, very tall hill to climb. So we want to but what do we do for these infrastructures? We want to create a proof of governance mechanism. Because we're building this infrastructure, we want to make sure if these regulated spaces within our industries want to create their own distributed or non-distributed infrastructures which can operate on scale with Web3 techs, then they could actually get checked. Their governance structures and the fact that their network is following the rules that they agreed upon is actually being checked at certain level. And that's something that we are building. Third is proof of health. Now, this is one of the biggest problems with a distributed infrastructure. It is like the problem of connecting all our rivers in the country. You have heard about that problem, right? The problem with that great concept. We will not have, we might be able to safeguard water shortages at a certain level, but what happens if some area floods? Or what happens if there's a LIC IPO and suddenly we have a huge spike in our securities market, right? And activity is suddenly off the roof. Would I be able to make my payment to my food bill just because because LIC is actually heating up the system? So we can't have a system which can only work, which is interconnected, and not think about the problem that one overflow actually impact the other overflow, other part of the network as well. So how do we solve for that, right? How do we create a proof of health where one infrastructure, if it goes to splurge, actually creates more infrastructures for it? Right? So that's another, and then these individual infrastructures which are responsible for particular parts of our universe, our distributed universe, are also healthy. So the proof of health is the third aspect of this particular infrastructure that we are building. The last is the interoperability infrastructure. Right? The last but not the least, the very, very important part is that we have so many distributed infrastructures, some natively grown, some non-native to us, right? Some already grown in Ethereum or Polygon, and a lot of people doing a lot of good job there. Then how do I create an infrastructure so that they could A, be compliant? We have already looked at it at the proof of compliance level. B, they are healthy, that they are actually maintaining good level of services, but C, are also able to operate with other ends of our system, right? That is an interoperability infrastructure that we are building as part of our distributed public infrastructure. Right? The interoperability allows us to do a few things, right? In a compliant fashion, we are able to look at do an insurance contract, and that insurance contract is able to talk to tokenized or a message-based store value exchange. Message-based store value exchange, we already know is IMPS. Right? We have it in our country. UPI is a very high volume space, so let's just park it for some time. But IMPS, a message-based system which exists in our country, can that interact? Can this infrastructure itself, IMPS infrastructure, be on this distributed public infrastructure? The answer is yes, it can be, and that's what we are working towards. to summarize, distributed public infrastructure would low. So why are we doing this? One of the very basic agendas that we have understood is distributed public infrastructure brings out removes a lot of compliance cost from the system, removes a lot of reconciliation cost from the system. So while we might not decentralize all the control mechanism, it makes sense to actually decentralize the infrastructure to reduce the overall cost. And that means because we are essentially a Section 8 company and our job is financial inclusion, right? To create the space, the cost space, where we can actually take our services further down the pyramid to the next 200 million that we're aiming, right? The next, eventual adoption of user-held identities would make identity theft at scale very difficult. Now that's something that is given. Because identity theft has been a constant part of our centralized lives right now. Every year we get some degree of identity, and we're trying to create vaults. We're trying to create mechanisms to actually reduce it. But it's a fight in which constantly, whenever there's a loss, there's a huge loss. Right? And what we are changing with this particular infrastructure, if it's a user-held infrastructure, yes, you still can actually go and steal a theft, right? You can do social engineering and steal somebody's identity. Those things cannot be solved. But even if you did steal an identity at scale, you were a master hacker and went and cracked an SSL, you could hack a stream. But then this is the same amount of effort that you took to actually handle an entire SSL. You will take to handle the throughput that you will get with one transaction from one person. And that is reducing the throughput of a hacker by a huge margin, making it extremely uneconomical for them to invest into hacking. Current DeFi infrastructure, this entire infrastructure also leads us maybe to a paradigm where we can actually look at the current Web3 to prove their legitimacy. Right? Currently, it sits in not illegal category within our country. It could actually start proving its legitimacy, that it follows the rule of the land. Today, there is no way for them to prove it as well. While there are fears on a centralized side, there are inabilities for them to prove that they're doing right business. Not everybody is trying to do money laundering, right? Most of them are actually legit business. And this infrastructure could provide them a pathway to prove their legitimacy. This public infrastructure provides base to create a legal framework for Web3 to exist and thrive within the country. Understand this, right? Until unless you prove a technology, until unless you scale a technology, you cannot have a rules around it. So this infrastructure, if scales, and hopefully we will be able to do that by end of this year, we will be able to prove that by end of this year. We could actually give the pathway for people to create do's and don'ts, and hence a legal framework in which a Web3 industry could thrive. The last but not least, the last passing thought I want to leave you with is that at NPCI we deal with scale, a scale of unprecedented level. We have high throughput systems with low latencies. We maintain throughput of 7,000, 8,000 TPS. We maintain latency of less than 200 milliseconds, right? Even if we go a little further, and even if we are able to distribute system and still maintain a latency of 1 to 2 seconds, and able to create a distributed infrastructure which is 1,000th of a cost, we create an infrastructure that is not just for India, which is about 16% of the world's population. It's also for humanity. So essentially, this infrastructure, why it's a good idea, is this infrastructure that we are building is a good idea because it creates not only capable of penetrating for next 200 million in India, it creates the capability of penetrating financial services to a lot of parts of the world which have no idea of how to get access to financial instruments. Thank you.
Any questions?
Yeah, thanks for the session. It's a nice presentation. So when we say this public distribution infrastructure, is it an application on blockchain we are talking about?
It is an application of blockchain, yes, but not just blockchain.
Okay, so my doubt will be, I'm taking this crypto as a classic example because that is the application, that's the best example for blockchain. So almost all cryptos are subject to forking of the blockchain.
Absolutely.
Okay.
Absolutely.
So if NPCI launches something like this, or RBI launches something like this, what is the chance of it getting exposed to a forking?
There are two aspects to this, right? First of all, what we are talking about is an ecosystem of blockchains, even if we are talking in a blockchain language. And not necessarily every part of that ecosystem is a blockchain, right? It could be a centralized application in the mix. It will work equally well. But at the center, it is. So forking is possible, obviously possible, but forking is managed well also and managed badly also. So you can actually look at the good examples of forking, where it was not because of somebody stole or there was a big problem with the protocol, and hence we had to steal it, we had to change it, and hence we could, hence the fork got created. But we got some really seamless forks as well, right? So we're looking at that as examples. Secondly, there are two parts to this infrastructure. One is a permissioned regulated space. One is an unregulated space. Unregulated space is going to work the way they are. All we are giving is a capability for them to prove that they're legit. They're following the rules. They're at a transactional level, right? And hence the forking and the life goes on the way it is for the unregulated. For the regulated space, it's a permission layer where basically not only stakeholder and the agency basically decides upon it. But any system which is designed in a permission system, if you look into background, you will never hear anything about forking. Why? Because essentially backward integration is inbuilt into these systems. So forking is a problem when you have a permissionless infrastructure that will remain. But the legitimacy of their decision making and their alignment to the rules and regulations and compliances that they need to adhere to would be facilitated. It's an enablement infrastructure. It's not a fact-finding infrastructure. It's an enablement. If you follow this, if you integrate it, wrap our tokens, our smart contracts into your APIs, you would be compliant by default. So that's for them. But the forking stays same way for the unregulated space. Regulated space is anyways a permission infrastructure. So essentially, forking is not a concept because you have backward integration by default.
Thanks.
Yeah.
Any other question? Yeah. Mic here, please.
Hi, nice presentation. So, are we going in direction of CBDC, this particular thing, or is it different?
So look at it this way, right? I mean, we've seen in news, right, and that finance minister has already said that CBDC is something that we are working in the background. They are working on the background. So essentially, if CBDC comes in, which is essentially nothing but tokenized in the world of in the technologist's brain, it's just tokenized store of value exchange, right? Which is very common in the crypto world, right? But it is now having a regulated entity on top of it. So yeah, it would become one of the store of value exchange mechanisms as a part of this infrastructure. But again, it is an ambit which is larger than that. Right? We also have IMPS, which is a message-based infrastructure, which works absolutely fine as well for most of the use cases that you have. So it will also be part of it, right? And tokenized payment, yeah, of course it would be a part of it, because essentially that infrastructure would be also a distributed infrastructure, and it would be provisioned as for the lack of better word right now, I will call it an L2 to our entire infrastructure, particular functionality that it provides to the overall infrastructure.
Are there? You're audible. Just speak a little louder.
I really can't hear you. Could you be a little louder?
Can you explain the geofencing of in blockchain?
Okay, geofencing, I never said geofencing of the blockchain. I said the geofencing has to be enabled, so the transaction has to be can be geofenced either by direct tagging of the transaction or from the source of origin of the transaction, right? So I never said blockchain needs to be geotagged. I only said that geotagging has to be enabled for the transaction. The mechanism, as I said, blockchain is a subset of all the technologies that are part of this particular tech. right? And some of it, by the way, you do a Google Pay is active in US and India. Have you tried doing it in both countries? It behaves very differently. It's a geotagged. So essentially, wallet systems could easily be geotagged, and it's been something that's been there for a while. It's not something new. So geotagging of wallet system is fairly easy to do. Geotagging of transaction is fairly easy to do. If we take point of origin of the transaction as a source of that data. Geotagging of blockchain is not a necessity to be able to find out that if the particular transaction has happened within the ambit of Indian infrastructure, Indian legal system, or outside legal system. So, but blockchain by default, this is a compliant infrastructure which would also be hosted out of onshores. So it will never be hosted offshore. At least the compliance infrastructure that we are building. So that way we know, because it's a permission. It's not a permissionless infrastructure. It's a permission infrastructure.
Thank you.
Any other question, or shall we move ahead?